Good morning. Actually, we're halfway through the trading day. It's 10 o'clock Pacific Standard Time, Las Vegas time. Um, Stock markets are very rocky. We have showed in other videotapes why we are in a correction phase, in phase one of a correction phase. We have showed monthly, we have showed weekly, we have showed daily, we have showed where the turning point has started, we have showed key technical support levels where the leadership stocks like Apple, Google, IBM, Intel, Goldman Sachs, Amazon.com, Priceline, a number of the leadership stocks in the commodity related area, which have had reversals. And this is just as if you were doing the bottom with stockmarketfunding.com last year around March. We were buying that bottom. Right now, we are in a correction phase, and a lot of it has to do with what we're going to talk about here. It's called the SMFI on the economy and the stock fundamentals. Let's start with the stock fundamentals in the last few days. They have not been bad. However, they had ran so far so fast that the great news was sold. We have videos that we had stated over a couple of weeks back before earnings season got here that this very well could be the case. That's why stocks like Goldman Sachs are down almost $20 from yesterday's swing high. Google had the best earnings report that we could ever want. Google blew out the numbers. They did lots of things. But we're going to talk about why. Here's the reason why. The Obama administration has come out and attacked our financial banks. It was your administration that had passed the TARP fund. Certainly was not the citizens who live in America. And they are trying to gain by telling the big firms that, oh, proprietary trading, no more of that, and that you're going to be restricted in hedge fund activity and how you're going to regulate the banking index. The government doesn't need to try to control the business models of America. This is not the kind of government that we want, but it is what has started a sell-off. The Dow transports yesterday took these markets down severely, right along with the financials. That's what led the market higher. Then we have the heavily related tech sector also add to the downside, along with the semiconductors. In the last week, we have seen a dramatic trend reversal. The economic picture has changed. And by all of this rhetoric and wanting to go to war with your banking industry, it was them. It was the government. They're the ones that did that, not the taxpayers. Then to try to come back and attack the banking sector and get face with the taxpayer, this is all very wrong. And I've never seen nothing like it in my life. And this health care bill is that, yes, there was an election, and that man there, what's his name, Scott Brown, he's not going to be able to change everything. He's just one person. And basically, the stock market is showing a reversal mode. That means that the psychological thinking processes by mutual fund managers, portfolio managers, hedge fund managers, institutional traders, not institutional traders are traders that trade with lots of money and they're institutional. Then there are institutional investors. So the whole community of everyone combined, from the very day trader all the way up to the very top, is starting to change the way they feel. Now, what we're going to be doing is we're going to be updating people as to how this will all turn out. At www.stockmarketfunding.com, we will give you a weekly update weekly technical analysis update, right along with the economic update. And basically, we may have put the high in for the whole year of 2010. It's very possible. We thought that in the first 3 months that we would put that high in and we would never see it again. Because the back half of the year is going to be much worse. And it was about buying the market. The earnings have been great, but the analysts have gotten ahead of themselves. And just like at the bottom of the market, analysts were very pessimistic, taking the numbers way down. Well, guess what has happened? They have taken the numbers all the way up and built in expectations that we believe economically are not going to be sustainable. There are going to be some great companies out here like Google. Then at times there'll be great companies like Apple that will continue to try to do their thing and continue to execute their business model. But the problem that we have in America today is that the consumer is going to have all of these tax hikes. That's not sustainable to consumer growth. Consumer growth is that they're saving more money. They're still terrified about the unemployment. We looked at the Pacific Northwest and Southwest region. We have found out that that unemployment rate is skyrocketing. It hasn't gone down, not like you've been led to believe. Don't believe it, because it's not true. We stabilized. We had enough stimuluses that came into the market. You throw enough water on the fire, yes, you'll put the fire out for a while, but guess what happens? The fire's been relit right now, and the fire's not out. We have started a new trend in these markets. What happens at market bottoms or market tops, there is a specific pattern to bottoms and to tops. Top reversals are in play. Bottom reversals have their pattern when they go into play. But right now, SMF is encouraging traders, investors alike, and people in the investment community is they must be careful now. If you don't have the skills on how to hedge your portfolio or hedge your assets, well then you should probably come and take our free 5-day trial at Stock Market Funding. We have lots of proprietary risk management skills that you can use when these things start to happen. We've seen last Friday, not this Friday, last Friday, they sold. They came back on Tuesday. We had a holiday. They bought one day, and we've had nothing but continuation selling. So the economic picture has changed a little bit because small businesses are suffering, have been suffering for the last year and a half. And the thing about it is, banks didn't lend when we were in the good times in the last 10 months. Why would they lend now? There's no reason to. And they're going to be taxed by your administration. And energy, oil, energy is going higher. We're all paying more. That's another tax right now. So the consumer, without the consumer and small businesses fueling this, we need tax relief is what we need. The Bush tax cuts, 2011, the market is forward-looking, potential inflation. This does not look well. We have ran tremendously off the bottom. This is a new year. 09 is over with. That mechanical move and that big swing, pendulum swing is, the way I see it, is now out of the way. Because it is. And we're having a big problem. Stay tuned. We got free videos for you on our website. We've got an economic output that we can give you weekly. More importantly is you can visit us. We'll teach you how to be a professional. Have a good day. It's a Friday. We'll update people again over the weekend as to what next week will look like.